Dear students, today I've come to you with a new video. Let me share the screen. Yeah, today I'll take up a new video and the same topic, profit and loss appropriation account. I have uploaded one video earlier, 1 week back on profit and loss appropriation account. But today I'm uploading one more video on profit and loss appropriation account of partnership. You know why this account is made for the appropriation or sharing of the profits between the partners. But why I'm going to upload one more video here. The reason is that I'm going to show here the accounts on the assumption that capital accounts are fluctuating. You know there are two types of capital accounts of the partners. One is fixed, when partners capital account are fixed, and another when partners capital accounts are fluctuating. I have already told you that when partners capital accounts are fixed, then you have to prepare current account, partners current account. But when partners capital accounts are fluctuating, you need not open any current account. All adjustments will be recorded in partners capital account. So today I'll be solving the same question I've given that day. This question I'll be solving on the assumption that partners capital accounts are fluctuating. Let me read out the question for 1 minute. Omol and Bimol have started a partnership contributing rupees 80,000 and 60,000 respectively on 1st April 2020, right? They have started the business. So it will be through cash, cash account will be debited like that. Then Omol is to be paid a salary of rupees 6,000 per annum. It's clear to you. And it is also provided that interest to be allowed on the capital at 6% per annum. So you have to calculate interest on capital at the rate of 6% per annum. And on drawings also there are interest, but that is percentage is not given, but the calculated amount is given. On drawings, interest is 150 rupees for Amol and rupees 120 for Bimol. So this is given the question. And one more point, Amol has withdrawn rupees 5,000 and Bimol has withdrawn rupees 4,000 during the year for personal use. So these are the drawings. And net profit of the business for the year ended 31st March 2021 amounted to 28,000. So net profit is 28,000. That also you know. So what you have to do, you have to pass journal entries in connection with interest on capital and drawings. You have to give journal entries. I showed you that there also, but there will be a little bit of change here, and salary to partners. You have to give journal entry for salary to partners. I will be showing you that, and then distribution of profit, how profit is distributed. And after doing these journals, you have to prepare profit and loss appropriation account. It will be almost same that I showed the other day. And partners capital account you have to prepare. But here you have to assume that partners capital accounts are fluctuating. So when capital accounts are fluctuating, you need not prepare any current account. So let's start solving the question. See, these are the journals. First, 31st March. So you have to, they've been asked to give the journal of interest on capital and drawings, that much. It's not mentioned that you have to give journal for amount brought in business as capital. So that I've skipped. But you have to give journal on interest on capital and drawings. So interest on capital, you have to calculate what percent? 6%. 6%. See, 6% interest on 80,000, it will be 4,800, and 6% on 60,000 with 3,600. So 4,800 and 6,300. So what is the journal? Interest on capital account debit. Total is 8,400. To Omol's capital, 4,800. That is 6% of 80,000. And to Bimol's capital account, 3,600. That is 6% of 60,000. And the total interest will be coming to interest on capital account debit, and partners capital accounts are credit. See, that day I give credit partners current account, but here I am giving capital account because we did not make any current account. Partners capital accounts are fluctuating. So interest on capital account debit to Omol's capital account to Bimol's capital account. In case of fixed capital, you give to Omol's current account to Bimol's current account. But here capital accounts are fluctuating. So you are giving to Amol's capital account to Bimol's capital account. So entry number 1 is over, interest on capital. Interest on drawings. See, interest on drawings will reduce the partner's capital because partners have to pay the interest to the firm. So when capital is decreased, reduced, is debited, then Amol's capital account debit 150, Bimol's capital account debit 120 to interest on drawings. Interest on drawings is a gain for the firm, but expense for the partner concerned. So partners' capital accounts are debited here. See, in the earlier video I showed partners' current accounts were debited because at that time capitals were fixed, but here capitals are fluctuating. So Amol's capital account debit, Bimol's capital account debit to interest on drawings account. So capitals are reduced here. So this is done. And then salary. See, Amol is getting salary. Only Amol is getting salary. And Amol's capital will increase, isn't it? It is his gain. So salary to Amol account debit 6,000 to Amol's capital account. Amol's capital account is being credited, isn't it? So increasing by the salary. So salary to Amol account debit to Amol's capital account. So this is done. So now see this interest on capital and interest on drawings and salary account. All these things we have to transfer to profit and loss appropriation account. So let's go one by one. See, if it is an expense for the firm, then profit and loss appropriation will be debited. But if it is gain for the firm, profit and loss appropriation will be credited. Let's see how it is there. See, profit and loss appropriation account debit to interest on capital and to salary to Amol. So interest on capital and salary to Amol, these two are expense for the firm. These are gain for the partner. There are two parties. One is partnership firm, other the partners. Those transactions are between the partners and partnership firm. So that way you think that will be easy for you. And in between you are making PL appropriation account. So profit and loss appropriation account debit, we have given 14,400. How? Interest is 8,400 and salary is 6,000. So you total it. So profit and loss appropriation account will be debited. Total 14,400 to interest on capital 8,400 to salary to Amol 6,000. So this entry, hope it is clear to you. But one more item is left here, that is interest on drawings. We have to transfer interest on drawings to profit and loss appropriation account. So here see, it is a gain for the firm, isn't it? So interest on drawings account debit to profit and loss appropriation account. Just see once again back, when it was interest on capital, then profit and loss appropriation was debited, isn't it? And salary also, in salary to partner, interest profit and loss appropriation was debited. But when it is interest on drawings, then profit and loss is credited. Now this profit and loss appropriation account debited 14,400 and profit and loss appropriation account credited 270. This difference between the two sides of the profit and loss appropriation account is very easy to see and understand in the ledger, but we have to learn journal also. Forget about ledger now, we have to learn from journal. So how to find the profit from journal entries? You do in working, you do profit and loss appropriation account is take the debit figures and total and credit figures total. So in this question, debit side profit and loss appropriation is 14,400 and credit side is 270 and nothing else. So this difference is debit side is which side is more? Credit side is more. Which side is more? Profit and loss appropriation account, credit. Oh, one more point we have to remember. One more point is there. We have not taken it. See, they have not asked us to give the entry. See the last line of the question, net profit of the business for the year ended was 28,000. So this goes to credit side. We have not given any entry for that because they have not asked the entry. They have asked the entry for only interest on capital, drawing, salary, etc. So that profit 28,000 is going to credit side of profit and loss appropriation account. So we are getting in credit side 28,000 and we are getting on credit side 270. So 28,000 and 270 credit of the profit and loss appropriation account. We total this and from them profit and loss appropriation debit is 14,400. That difference. You understand? Profit and loss appropriation debit side and credit side. In debit side, it is 14,400. And in credit side, it is 270. But that 28,000 net profit, that is also coming to the credit side, isn't it? So that way the difference becomes credit side more, and credit side is, it is 13,870. Dear students, this is the distributable profit. This is the distributable profit. See the question they mentioned, you have to give journal entry for distribution of profits. That's what I'm doing now, journal entry for distribution of profits. Profit and loss appropriation account debit 13,870 to Amol's capital to Bimol's capital. We have given it equally because no ratio is given. In the question, if no ratio is given, and in the agreement, suppose there is no ratio given, then profits are shared equally. And we have done it equally. And see, earlier in the earlier video, I gave you profit and loss appropriation account debit to Amol's current account to Bimol's current account. But here, I shall not use current account. I'm repeating the same thing because his capitals are fluctuating. So I am using Amol's capital account and Bimol's capital account and equally. So profit distribution is over. Profit distribution over. But they have withdrawn money for drawings. That entry also I'm giving here. They have withdrawn money for drawings. So Amol capital account debit. See, drawings personal use and drawings will reduce the capital. Amol's capital account debit to Amol's drawings account. 5,000. That is for drawings. Capital debit because capital is reducing. Again, Bimol's capital account debit to Bimol's drawings account. Dear students, please remember one thing. If you are to give one more entry, suppose they see Amol and Bimol started business with cash 80,000 and 60,000. If you have to give this entry also, suppose, then it will be cash account debit or bank account debit to Amol's capital account 80,000 to Bimol's capital account 60,000. But I have not given here, it's not asked only. So that is the entry actually. So these are the journal entries actually. This finishes all journal entries. You just watching my video, you do it yourself. Only then you should understand. You take an exercise book and just take listen to my lecture and copy from here, and that way you can learn it properly. And if there is any doubt, you can talk to me. Then now profit and loss appropriation account. How this is made? See, first of all, in the credit side, you have to give by profit and loss account net profit. That 28,000 I told you, that will first of all come here by profit and loss account, because profit and loss account gives you net profit, and that comes to profit and loss appropriation account. So that has come here. And left side you give all expenses of the farm will be coming to the left hand side. To interest on capital, Amol 4,800, Bimol 3,600, and to salary to Amol again 6,000. And right side, if you buy interest on drawings, Amol 150 and Bimol 120, and it is coming 270. Now the difference between two sides is coming 13,870, and that is equally shared between the partners. So I've written two partners capital account. In the earlier video, I wrote two partners current account because at that time capitals were fixed. So here we shall write directly capital account because capitals are fluctuating here. And this is 6935, 6935. Profit is shared and profit and loss appropriation account is over. So in all cases, profit and loss appropriation account will be almost same, but sharing of profit there, in case of fluctuating capital, you shall write to partners capital account, and in case of fixed capital, you shall write to partners current account. But other things, everything is same. Now let's see, next account is partners capital account. See, when you make partners capital account and when partners capital accounts are fluctuating, then all entries will be coming to capital account. Earlier, whatever entries you recorded in current account, everything will be coming to capital account. So, and there is no current account. So what you have done, you see the capital account by cash account, Amol 80,000, Bimol 60,000. First, we have given the amount with which it started. And the date also we have given. See, my date is a very small, this column is there. So date we have given 1/4/20. On that date, they started the business. By cash account 80,000 and 60,000 in two capitals you have given. And then all other things will be coming here as per the journal. And suppose you don't have to journal, suppose you have to do only capital account, then how to remember? Then you remember this way, anything which reduces the partner's capital will be coming to the debit side. Anything which increases the partner's capital will be coming to the credit side. That you remember.
then there won't be any problem. See, now you can post from journal to ledger. Instead of posting from journal to ledger, or instead of making any journal, then you can directly make capital account. If journals are necessary to be prepared in the given in the question, they have to give journal entries like what I have shown you. This you have to give journal entries. But if you are not always journal entries are required. Suppose you have to make directly capital account. Then simple formula remember. When capital is increasing any item, that item will be coming to the credit side. And any item which reduces the capital coming to the debit side. Now let's see one by one. And all entries will be 31st March 2021 I have given is the year ending next year, isn't it? So two drawings. First I have given two drawings because drawings reduce capital. Amol 5,000, Bimol 4,000. Then two interest on drawings will also be coming here. Interest on drawings, Amol 150, Bimol 120. And come to the right hand side by interest on capital, Amol 4,800 and Bimol 3,600. By salary, only Amol gets salary. So Amol 6,000 and Bimol is not getting, so I've given a dash. Then what is there by profit and loss appropriation account? Yes, you see in the last account, in profit and loss appropriation account, debit side you wrote to partners capital share of profit. That way you share the profit. You can also write two share of profits. Instead of writing capital or current year, you can write two share of profit, Amol this much and Bimol this much. So 69, see 6935 is coming to the debit side of profit and loss appropriation account. So it will be going to the credit side of capital account. So I've written by PL appropriation account, share of profit 6935. Now all entries are over. So you total the right hand side is more and left hand side you find the balance. Here you have to give the year ending date and next date balance BD will be 1st April 21. Anyway, so think of Amol. Amol credit side total is 97,735. Bring it to the debit side and Amol's balance to balance CD is 92,585. You can do in calculator. From 97,735 you reduce 5,150. What will give it? So you've got this balance 92,585. And like that, Bimol credit side total is 70,535. To bring it to the debit side, so balance after deducting 4,150 to find a balance 66,415. So two balance CD you have got these two balances, and this will be the credit side next year by balance BD. This 92,585 and 66,415 these are coming there. Remember, in some question it may be that debit side is moved. Then debit side you total and put in the credit side, and by balance CD will be coming to the credit side. Then two balance BD will be coming to the debit side. And maybe one partner is having debit balance, other partner is having credit balance. That means in case of one partner debit side is moved, another partner credit side is moved. So two balance CD will be once, and again by balance CD. Then again two balance BD, and sorry, two balance BD and by balance BD like that. So it is just like you have done a double column cash book, triple column cash book, just like that you have to make the balancing. So this way your capital account will be complete, and see all entries will be coming here in the capital account when capital accounts are fluctuating. But in the last video you see I have put in capital account only one item by cash, or in some question balance of capital is given, cash not given. But so by balance BD, to balance CD, by balance BD, like that much will be coming. And in current account everything will be coming when capital accounts are fixed. But in this question capital accounts are fluctuating, so no need to make any current account. Everything has come to the capital account, and balancing is just like double column cash book, triple column cash book. You've done several columns are there how to balance. Similarly you have to balance here also. So that's it. I have explained to you what PL appropriation account of partnership when partners capitals are fluctuating. So this was my topic today. Hope you watch my video properly and watch and write, solve the question. And if there is any question, any problem, any query, you contact me maybe in the chat below. You can comment, you write, or you can contact me to my WhatsApp number. But please study, because I've seen during this time, lockdown, you're getting a lot of time, but some of you are not studying, not going by not watching the videos. or not going with the study content that teachers are providing. Please be serious for your career. Don't think too much of examination. Examination will be held, examination will not be held. That is a different issue. But study should always continue. So thank you very much. With this, I end up today. Stay blessed always, stay fit always, and stay safe always. Thank you.